Nigeria officially became a partner country January this year. That journey began October 2024. Okay, so officially recognized as such. That means we are now recognized as a badge-carrying member of BRICS, even though not a full member per se.
Yes.
But we carry that identity. So what does that mean?
You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will discuss Nigeria and the pathway to attracting significant FDIs. And joining me virtually for this conversation is Dr. Biodun Adedipe, an economist and founder, Biodun Adedipe Associates Limited. It's great to have you once again on this conversation. Thank you.
Thank you so very much, Ottoabasi. It's always a pleasure conversing with you on the Nigerian and global economy. Happy to be with you today.
Thank you very much. Let's begin by looking at the just released National Bureau of Statistics first quarter 2025 capital importation report. What are your thoughts on the data?
Right. We start by saying it's a very interesting one that carries a number of positives and also give pointers as to what we need to address. Now, the first thing that I observed there is that this is like the second highest, or in fact, possibly, let me put it this way, the first highest first quarter capital inflows post-COVID. And I say that deliberately because if you look at finance globally, there's a major shift that happened during COVID. So when you look at trends and the flows of capital pre-COVID, they have taken a different turn since post-COVID. So usually when we analyze the market, therefore, we interpret what happens in the market post-COVID differently than what it was before COVID. But if you look at Nigeria in the last 12 years, taken from first quarter 2013 till date, you'll find that the highest first quarter figure we had was in 2019. And that's quite interesting. Even though this is not an election year, but that was an election year where we also looked at what was the likelihood that President Buhari will win a second term. And all the pointers and intelligence there indicated that it was likely to win a second term. And so that affected the flow of capital into Nigeria. In fact, the last 12 years, that was the highest first quarter inflow we had in terms of capital importation. Put that on one side. But this particular report for first quarter of 2025 has some peculiarities. Yes, it's quite robust because it's almost equal to the total inflow for the entire 2024. And that is quite instructive. Okay, that such interest in investing within the Nigerian space was so high that as much as we had for a whole year, 2024, came in the first quarter of this year. So if you do a straight line extrapolation, of course, I mean, it doesn't necessarily follow that pattern. But that will give a pointer that, oh, probably this year we have over $20 billion inflows in terms of capital importation. But it doesn't work like that, like I normally say. But you look at some peculiarities of it, yes, dominated by FPIs, that is foreign portfolio investments, which accounted for about 92.3%. So there was some analysts, they will say, oh, that is worrisome, but I look at it differently. Now, why do I look at it differently? For that to happen, there are three fundamentals that we must consider. First is in the last 2 years, now we have started counting additional months. Nigeria has embarked on massive reforms that at my own latest count, I've touched on 15 different areas of this economy and sectors, all right, so far. Now, it is not just reforms, but over the last 2 years and 2 months counting now, the reforms are being sustained, which means there has not been reversal, which has been a historical concern about investing in the Nigerian space. So it then means we are seeing a kind of semblance of policy consistency that is of importance to global investors. Then secondly, is the fact that most of the major decisions we have seen so far by this government have been driven more by economics than politics. Okay, that also brings reassurance to investors. Then the third one, which is also important in this, is what is happening with the monetary policy as monetary authorities, that is Central Bank of Nigeria, which of course returned to its core mandate, which simply is price stability, and has demonstrated consistency in that since the current management came into office. So that on its own also has given some confidence to investors. Then they now look at how even the monetary policy is unfolding. We see NPR at double digit, of course, raised significantly all through 2024. But so far in 2025 has come to 27.5%. And of course, what does that mean for Naira assets? Naira assets now turning very high rate of return. And in fact, if you look at the fixed income securities, very high yields. So that on its own is attractive to investors. So on the back of policy stability, reforms that are reshaping the economy and also creating opportunities, investors naturally will troop in. But usually their first response is what we are seeing, foreign portfolio investment. Now we look at that and say, oh, it can live at the drop of a pen, all right? And that speaks to two important things. One is, how do we sustain that confidence? It means what we choose to do is important as much as what we choose to say. What oftentimes referred to as significant utterances of key government functionaries. So if those things align with what the government is doing, it is reassuring for investors. Then on the side of FDIs being fickle, I was liking it to what banks do. Okay, banks have different types of deposits. The one that is most fickle among them is current account credits. If banks want to sustain current account credits, which often comes at zero cost anyway, and it's the most attractive deposit to banks, it means you must manage relationships very well and sustain confidence and trust of your depositors. The same thing, in my own view, we apply in this instance. If we can sustain that, they will likely have FPIs remain with us as long as they are a support to our economy. The other side, which is of concern, people say, is very low FDIs, yes, coming in at 2.2%. Okay? But even at that, it means if one states that, 2.2% is the contribution of FDIs to total capital importation, if we consider what happened year on year between first quarter of 2024 and this first quarter of 2025 that we are discussing, FDI actually increased, okay, by 5.9%, whereas FDIs increased by 150%. So both of them increased. Interestingly also, and I will point out because I haven't heard many analysts talk about that, other investments, which are loans and then trade credits, other claims, currency deposits, have reduced significantly in the last 1 year by 73%. So for me, those are the key points we take out from this report before we now go and do further interpretation.
I like the fact that you've said significant improvements, of course, in the foreign portfolio investments. And of course, Doctor, you've been involved as an economist for over 3+ decades. You've even involved in advising government. Foreign direct investment drives a lot of economic activities, as we even see across the world. And this leads us to our next part of this conversation. When we even looked at the last 6 quarters of capital importation reports, zeroing down on foreign direct investments, we could see that, like you said, it's not really cumulated even to almost like $1 billion in terms of what we saw. And that really is a huge concern, as you've highlighted. This administration has taken a lot of steps, like you said, reforms in energy, reforms in foreign exchange, reforms even down to recently the insurance sector. A lot of reforms are happening just to see that the economy is moving. The big question is that, can we begin to see this trend reversed in the quarters to come? Because FDIs are very critical. We've seen what happened with telco and FDIs. We've seen what happened in other critical sectors. So we see this trend reversed, attracting FDIs.
Excellent question. And for me, that really is the next block in terms of work. Now, as rightly said, this government has done a lot of work looking at different key issues at the macroeconomic level. Now, for FDIs to tick up significantly, we now need to deepen reforms at sectoral level. As rightly said, yes, insurance now with the new Insurance Act. And that one I find very exciting.
Yeah.
Because some 2 years ago, we had a conversation with, the Senate Committee of Banking, Insurance, and other financial institutions. And then in the course of the conversation, we raised a particular issue, an act in the insurance space in Nigeria that had been in place since 1945. It, of course, is now addressed with these reforms. Okay? So, in which case, if you look at the insurance sector, for example, there is the likelihood, therefore, that apart from the fact that there's a requirement in terms of capitalization, recapitalization, there are also some changes in the way that sector operates and insurance penetration. That's on the one side. Of course, if insurance is deepened, you have implications for investment in the real sector. Because the essence of insurance is to give you capacity to take risks. Because there's an underwriter somewhere that will hold you if you want to fall at some point. So I see that playing a role in deepening FDIs going forward. Then there are other sectoral issues. But the big issue for us, for me, is if you look globally, the sector that FDIs flow to mostly are those that have the required enablers. So if anyone wants to invest in manufacturing, what are the enablers? So if we work more on those enablers, then we see investments flow into that particular space. Nigeria has all the potential. If you talk about a number, estimated population, 237 million people, you think of that in terms of market. If that number is empowered, like the Chinese have done the last 20 to 30 years, so where you take a lot of people from below to above the poverty line, it means they become a part of a consuming army. So, and the bigger the consuming army is, the more vibrant that market becomes for any manufacturer. So if we now begin to deepen the enablers, and that means investment in infrastructure, and also begin to tweak policies and what can make it easy to do business. So ease of doing business becomes more important. So if we do that, we're likely to see an uptick of investments, in the real sector. We've seen some movement. For example, as you said, in O&G, that's oil and gas.
Yes.
During February 2024, when the president signed 2 executive orders, and currently, which shows in our oil production figures, you can see that clearly. Okay? And of course, dealing with the issue of oil theft also has encouraged fresh investments within that space. So those are the kind of things that we do. So that's why I say sectoral level interventions. Okay? Now, if we deepen that, then we see a significant uptick in FDIs on the back of what we have seen reforms in the last 2 years.
Okay, very interesting. We'll still come to that part, Doc. But let's look at the global trends. Every time you always present your, of course, economic outlooks. Just recently, you were, of course, the keynote speaker at the media review for the Charities of Bankers of Nigeria. And of course, we'll still take some excerpts of what you highlighted. The global trends of tariffs, you highlighted beginning of this year, the issue of tariffs, you've stressed that again, mid-year, and of course, the Trump administration, the United States has been carrying out a straight battle, especially with a critical bloc, the BRICS, which comprises Brazil, Russia, India, China, South Africa, and other allied nations that have joined that bloc. What are the risks for Nigeria? Because Nigeria has also been co-opted to part of BRICS. And how can we position ourselves to win? Because we are also in the race for capital globally, especially FDIs at this time.
Yeah. Fantastic. Now, Nigeria officially became a partner country January this year. That journey began October 2024. Okay, so officially recognized as such. That means we are now recognized as a badge-carrying member of BRICS, even though not a full member per se.
Yes.
But we carry that identity. So what does that mean? Of course, there's a risk in the sense of what we have seen with Trump administration anyway, identifying us with the BRICS, and now deciding to treat us like the BRICS members. Okay. But the reality of it is, I think the benefits weigh more than the risk in this instance. That's what we call the balance of risks. Okay. And why do I say that? If you look at the flow of investments, let's even say in the last 10 years globally, you find that a lot more investments flow from the South than from the West. So, and the question for Nigeria is, if what we need is FDIs, which direction should we look at? Should we look traditionally at the West, that quote and unquote, in my own interpretation, is stingy with investment? Okay. Or look at the East now, that is more generous in investment. All right. Take the Chinese BRI, Belt Road Initiative. Take also what some other, European countries even that are still part of the Euro, but are more towards the East, like Turkey, and a couple of others, what they are doing in terms of investment in manufacturing. So when you look at all of this, what it says to me is we should follow our economic interests and not be overly driven by political interest. Because at the end of the day, like President Clinton said, way back when he was president of the US, he said, is the economy stupid? That was the way he put it. He means, look, focus on the economy. Other things is sort themselves out. Yes, we talk about political economy, no doubt. But the primary thing that keeps politicians in office is the economy. So if you want the economy to grow, then you should look at the direction where it is easier and cheaper to get capital to flow into Nigeria. And so that will make me look more at BRICS Plus, as we call them today. And that, in my own view, Nigeria is going in the right direction. So which means we not frontally confront the West. All right? But in a very subtle manner, we know where the butter and our bread is coming from. I want to ensure that we face that direction and also encourage them as much as possible.
For what you said, don't confront the West, engage them. But of course, we must not lose track of BRICS, because that's where we can get massive investment. And interestingly, the Minister of Industries, Trade and Investment has recently engaged the United States of America, their team, and we hope that those conversations will lead to some win-win situation, despite the 15% tariffs slapped on us. Very, very critical at this time. Let's get back to reforms. You've highlighted the reforms, but your colleagues, some of your very respected economists like you, have highlighted the need for us to have an investment policy embedded in these whole reforms, because we need to be at that right pedestal to change the optics on improved foreign direct investment inflows into the economy. Do you agree with that? And in addition to these reforms, you've talked about deepening the enablers. What additional things must we do to boost that confidence to attract foreign direct investments?
Yeah, thank you so very much for that. I align with that argument because when it comes to investment and capital, you are competing. So, and your competition is not just in the African region. You are competing also with some Asian countries. You are competing with the Middle East. You are competing with the Oceania, South America. And interestingly, even the America. That's talking about, Canada, US, and even Mexico. All right, we are competing with all of these. So in which case, how will Nigeria become more attractive relative to all these other likely investment destinations? It must be something we interrogate on an ongoing basis. And that means, what do the regular investors look out for? Which is why the ease of doing business is important on the one hand, but now more connected to investment. And I'll give an illustration. If we want new investment, let's say in the ICT sector, as we have it in our contribution, the sectors that contribute to our GDP. So what can we put there that will attract them? So that would mean that we look away first from revenue generation. Rather, we look at building the block that will generate more revenue for us tomorrow. So what kind of incentives do we give to them? If, for example, someone builds a factory here in Nigeria, what incentives would that person have for choosing to build a factory in Nigeria rather than in any other African country, especially considering the benefits of African Continental Free Trade Agreement? So talks about open borders within Africa, which means site of factory anywhere in Africa. You can move your goods around without worrying about tariffs. Okay, so why should they choose Nigeria? That is why a focused investment policy, I believe, is important at this point in time. We need to interrogate that more. And then not only just to look at design and investment policy, look at what it is in those countries we are competing with. First at the regional level, and then within the African region. I can say that here without any doubt of misinterpretation. That is what some countries I know do. I know Ghana does that.
Yeah.
This time last week, I was in the Gambia. It was a conversation between Gambia and Senegal. Okay. It's also a conversation across some other West African countries. So Nigeria also should begin to look at it that way. So we are competing within the region and we are competing extra-region. That means with other regions of the world. So that is an area we need to look at if we want to build FDI significantly in the near term.
So very clear, we need a competitive investment policy.
Correct. That is the best way to summarize it.
Yeah, very. Now, from your assessment, what should be the role of subnationals and what are those sectoral priorities that should be part in terms of attracting FDIs or unlock economic opportunities? Because the whole sum of this is that when we see all these reforms happening, FDIs are very critical to creating jobs, building the economy, just like we saw with telecommunications, which has also defined what we call the information and communications technology sector, the ICT.
Yes. Thank you very much. Now, in answering that question, I will circle back to an experience I had sometime in August 2006. Okay. August 2006, I was privileged to give the keynote address at the opening ceremony of the Maiden Economic Summit of Oyo State.
Wow.
And so I said, what Oyo State should do is see itself as competing with every other subnational in Nigeria, that is 35 other states plus FCT to start with, and also competing with other African countries and even countries beyond. Now, the whole idea simply is this. If any foreign investor is considering where to put his next factory or whatever business he or she conceived, the first thing is, which region should I go to? So the person chose Africa. Next stage is, which country should I go to? This person chose Nigeria. Next question will be, which state should I go to? Okay, like we saw in this report we are discussing today, first quarter of 2025 capital importation. We've seen FCT now out to compete Lagos. Exactly.
Interesting.
So that is a clear indication of what I'm talking about. And this is very key because when we looked at the evolution and how China became what it is today, one of the key things they did is this question you asked. They created an environment where provinces in China were competing with one another. So in order to attract FDIs, every state plus the FCT must deliberately now see itself as competing with other states in Nigeria. So which means every one of them will making effort to make its own geography attractive to investors. And the more they have that competitive spirit, the more investors from within and outside Nigeria they will attract. And like you rightly said, if those investments come to the subnationals, that's where jobs will be created. And as you create jobs also, it means you are going to reverse the story about Nigeria in the last 10, 12, 15 years, that we have been growing in a jobless fashion, where we say we have had jobless growth. So if we are going to reverse that, what you said now must happen. And that means at the subnational. So every state government, therefore, will take seriously the need to interrogate their own investment policy, which is, what do I need to do in my own state to attract investors? So I want them to come to Ekiti State, just to illustrate, rather than go to Ogun, or go to Anambra, or go to Nasarawa, or go to Sokoto State. So what do I need to do in terms of the investment policy I have? What should I do with respect to enablers? Okay, so Those are the kind of things we need to do. So it's not about looking at federal government only. Every state government now must take it as business. I want to attract investors so that we can create jobs within my own state. So that's the way it goes. I think I flagged the same thing for Ogun State when His Excellency Senator Gbega Daniel was the governor of Ogun State. I flagged the same idea in a presentation to the executive committee of the state at the time. And I said, look at, this evaluation doing business by the World Bank at the subnational level. So where was Ogun ranking at the time against the other 35 states of the country and FCT? And I said, that should be a reference in whatever you need to change to make Ogun State attractive to manufacturers and other investors. Today is good news for Ogun State because they are thriving very well. IGR has increased significantly and all of that. So Ogun is now a major manufacturing corridor in Nigeria. So it's not rocket science. It's about doing what is right for investors to come into your own space.
Doc, the last part of that question, just in 1 minute, what are those critical sectors you see that can really attract these FDIs?
Well, I will place that in context of my own general observation, which is in fact beyond Nigeria, is common to developing countries. Those things are referred to as the 5 big deficits. Food deficit, in fact, that is primary for Nigeria. How do we attract investors into food processes, into food storage, into food logistics? That is fundamental because that will help us to break the back of food inflation. It has been the major challenge in reducing inflation rate in Nigeria. In fact, if you look at the latest data of that, at 22.22% headline inflation. But if you look at core inflation and food inflation for June, they actually increased. But not many analysts are talking about that. Okay, it means food inflation is key. So how do we attract investors into that space? And we know what the challenges are, that I mentioned: storage, logistics, of course, security is also there, and of course, irrigation, so that we can do all year-round farming. What is happening now? Price of tomato has collapsed because it's harvest season, and then very soon the price will go up again through the roof. It is because we don't do all year farming. Okay, that speaks of irrigation. So how do we attract investors into that space? Then we talk about manufacturing deficit. We've talked about how to attract manufacturers. There's also infrastructure deficit, very important, which is our government should not look at funding road and infrastructure delivery from the budget. You should also consider PPP, that's public-private partnership. It's a very good instrument for delivering infrastructure. So that's important. There's also housing deficit. In fact, for me, quote and unquote, using the Nigerian language, that's the baba of them all.
That's the biggest
because
one.
when it comes to housing sector, you can easily create jobs in millions, and you can also solve the problem of housing. 28 million units deficit estimated currently for Nigeria. That's huge. If you place that against the growth rate of our population, you probably will need to deliver 1.93 million housing units per annum over 15 years to bridge that gap. That's a huge opportunity. So, but what incentives are we giving to investors in that space? Whether they are financiers, whether they are underwriters, whether they are those who actually come to build, deliver. So what are the kind of, can we model what Egypt has done with mortgage financing and use that to address, social housing? Can we model what has happened in Singapore? Okay. We have models around the world we can learn from to actually deal with this deficit. So it is those sectors we look at and say, look, if we tackle the issues in these sectors, that can bring an upliftment to not only FDIs, but also connect to making Nigeria's economy to grow and create just the process instead of creating dollar millionaires.
Doctor, this is a very interesting conversation. We are very clear from what you've said that we need to deepen the enablers. Deepening the enablers is critical. Also, it is time to have a competitive investment policy as a country, which subnationals must also carry. And also, we must begin to attract those investments into the areas that has to do with food deficits, manufacturing deficits, and housing deficit, which you call the biggest of all. And then we can begin to see the numbers go up and economy opportunities thriving and our economy on the path to sustainability. It is time to get our foreign direct investment back on board. And thank you very much, Dr. Biodun Adedipe, an economist and founder, Biodun Adedipe Associates Limited, for this very insightful analysis on attracting foreign direct investments for our economy. Thank you once again for the time. Always a pleasure having you, because we always have rich insights from you.
Thank you for having me. Always a pleasure conversing with you.
Yes, thank you very much, Doctor. To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and our social media platforms to engage further. To come your way again, enrich yourself with the knowledge of socioeconomic developments around you, because it's the wise thing to do. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.